Folks, let me lay it out straight. Earlier this year, there was a big stir when Saudi Arabia made it clear, real quietly, that they're not too happy about the G7 playing fast and loose with Russia's frozen assets. Now, these aren't just any old assets. We're talking nearly $300 billion blocked off by Western nations because of the whole Ukraine-Russia situation. Now, the G7, yeah, that's the United States, Japan, Germany, France, Britain, Italy, and Canada. They've been scratching their heads, trying to figure out how to funnel some of that frozen cash to help Ukraine. One of their bright ideas? They thought about making some money from these assets, maybe around 3 billion euros a year, and mostly spending it on arms for Ukraine. They call it collateralizing, kind of a fancy term to avoid saying they're taking it outright, which has a bunch of legal strings attached and could shake up the whole Eurozone. But here's the kicker. Saudi Arabia isn't buying it. They warned, hey, if you start grabbing assets like these, what's stopping you from coming after ours next? It's not just the Saudis either. China and Indonesia are on the same page, worried this could open a real can of worms, setting a precedent where anyone's assets could be up for grabs in geopolitical spats. And nobody wants that kind of chaos, right? Plus, imagine the legal battles with Russia that could throw a wrench in the works of international finance. Now, why is this all important? Well, at the latest G7 summit over in Italy, the big shots agreed to a new scheme. They're setting up a $50 billion loan for Ukraine, leaning on the interest from those frozen Russian billions sitting in European banks. They figured it's a way to keep supporting Ukraine's fight and rebuilding efforts without crossing the line into outright seizing assets, dodging a whole lot of legal and diplomatic headaches. Now, let's get this straight. The US wanted to go full throttle, talking about grabbing those frozen Russian assets right off the bat. But our European allies? Not so much. They were worried about the legal mess and how Russia might hit back. So, what we ended up with at the G7 was a middle ground kind of deal. They decided to just use the interest from those frozen billions to support Ukraine, kind of like setting up a steady cash flow without getting their hands too dirty legally. But here's where it gets spicy. Saudi Arabia threw a bit of a curveball. Their finance folks weren't too thrilled about the whole asset-seizing game plan, especially when it comes to French bonds. Why's everyone all worked up about what Saudi Arabia thinks? Well, it's simple. They've got a big stack of European bonds. We're talking about a major slice of the financial pie here, folks. The Saudis haven't laid all their cards on the table about exactly how much they own, but it's enough to make waves. In 2024 alone, Saudi Arabia has been busy issuing international bonds worth a whopping $122 billion. And don't forget, they're also holding about $135.99 billion in US treasuries. This isn't just pocket change, it's a major financial play. If Saudi Arabia decided to start selling off those European bonds, it could send shockwaves through the markets. Imagine the chaos if other countries started thinking, hey, maybe we should do the same? Now, with Saudi Arabia flexing its financial muscles, issuing $7 billion in Islamic bonds and playing big in the international bond markets, it's clear they're not just sitting around. They're making moves that could shape market trends and sway investor confidence worldwide. As they push forward with their Vision 2030 to reshape their economy, Saudi Arabia is proving to be a heavyweight in the global financial ring, and every move they make has folks from Brussels to Wall Street paying attention. This isn't just about dollars and cents. It's about power plays and geopolitics, about who holds the cards in a world where financial moves can shake entire economies. So, you bet Europe's watching Saudi Arabia's next steps closely, because in this high-stakes financial game, one big sell-off could change everything. All right, let's dive deeper into the oil game, a real chess match between big-time players like Saudi Arabia and Russia. These two giants have been buddy-buddy, especially within the OPEC Plus alliance, which is like the Avengers of the oil world. They've been working together to make sure oil markets don't go haywire. Just last year, in 2023, they pulled a big move. Saudi Arabia cut down its oil production by a massive 1 million barrels per day, and Russia wasn't far behind, slashing 500,000 barrels daily. This wasn't just tweaking the dials. This was a major play to keep the oil prices from crashing. These cuts, they're part of a bigger plan to keep the oil market steady and predictably priced, which is crucial when everyone's wallets are on the line. Now, OPEC Plus isn't just a couple of countries having a chat. It's a 23-country powerhouse that controls over 40% of the world's oil. When they decide to extend these cuts into 2024, it's a big deal for global economies and your gas prices. Now let's not forget, while Saudi and Russia are tightening the taps on oil, there's a whole drama unfolding with the G7. They're using Russia's frozen assets, yeah, the big bucks they've locked up because of the Ukraine conflict, to bankroll a $50 billion loan for Ukraine. And guess who's not happy? Russian President Vladimir Putin, and he's pretty vocal about calling it outright theft, a big no-no that messes with the trust in our global financial system. But it's not just Russia growling about this. The BRICS countries, that's Brazil, Russia, India, China, and South Africa, are all giving the side eye. China and India, in particular, are pretty jittery. China's got a tight economic bond with Russia, so they're nervous about what this means for their own assets floating around globally. And India, they're playing it cool, but are definitely sweating about this stirring up more trouble on the global stage. This whole situation is a tangled web of economics, geopolitics, and energy strategies that could shake up everything from your gas prices to global financial stability. So, what do you think? Is the G7 move a clever financial strategy or a risky play that could backfire? All right, folks, let's zoom in on something huge here. The trade ties between Saudi Arabia and the European Union as of 2024. We're talking about a massive 75 billion euros flowing back and forth every year. That's no chump change. The EU is like Saudi Arabia's best customer after China, making up nearly 15% of its global trade, while Saudi sits as the EU's 17th biggest trading partner. The Saudis send over oil and petrochemicals, pretty much the lifeblood of modern economies, and take back machinery and all sorts of equipment. Now, imagine if Saudi Arabia just decided to close the shop. If they stopped selling oil to the EU, we'd see energy prices shooting through the roof. It'd be chaos with shortages, and you'd see global oil markets going wild. And the EU? They'd be scrambling to find other sources, which means everyone's competing for the same pie, resulting in even higher prices worldwide. But here's the bigger picture. How does all this tie back to the G7, those big economies that used to run the show? See, with Saudi Arabia flexing its economic muscles, it's got everyone thinking, are the G7 still the heavyweights they once were, or are they starting to sweat, adjusting their game because of moves made by powerhouse countries like Saudi Arabia? This shift is not just about money. It's about influence and how the global power map is being redrawn right before our eyes. Are we witnessing a new era where traditional economic giants might have to step back? That's the million-dollar question. Thanks for tuning in, folks. If you found this rundown insightful, smash that like button, and don't forget to subscribe for more deep dives. Got thoughts or a spark of inspiration? Drop a comment and join the conversation. Your support means the world to us. Check out our next video popping up on your screen now and stay connected. We're all in this together, shaping the future, one discussion at a time. Cheers, and thank you for being part of our community.